Well, I guess it was 2 years ago. I said it was going to close out 2020 at 28,000. So that looks pretty good. I haven't unveiled my 2021 prediction officially yet, but I will do so probably in the next week or so. You got to compare it to what happened back in 1992 when George Soros attacked the British pound and the Bank of England. And he broke the Bank of England, if you recall, and he made a quick $1 billion. Stan Druckenmiller was the architect of that. And right now, what we're seeing is a similar thing going on with Bitcoin. And what Michael Saylor figured out, and now possibly Elon Musk and others, I think Larry Ellison's going to get involved, is that they have the Federal Reserve Bank and other central banks in a very precarious position, because those banks have artificially pushed interest rates down to these extraordinary levels of almost zero, and or 18.4 trillion are now negative. So, and if they can borrow, as Saylor did at 75 basis points just now for 650 million, and buy Bitcoin, they are in a position of a speculative attack on the Federal Reserve Bank. Make no mistake about this. Michael Saylor and the Bitcoiners are attacking the Federal Reserve Bank and the global central banking system, as Soros did to the Bank of England. That's kind of the template that's being used globally. That's the inside ball. That's why Bitcoin, you could very easily see it trade to $200,000, $300,000, $400,000 a coin pretty quickly, because the central banks have left themselves open to this arbitrage, to this attack. And it's on. You know, the game is on now, and no one is pretending that this is not happening anymore.
Okay, but to counter that attack, we're seeing central banks, China leading the way, the euro probably following suit, coming out with their own digital currencies. China's in the process of testing one out right now. Is that a response to protect themselves?
No, because the currency they have now is a digital currency. The dollar, the yen, the euro. They are all basically fiat currencies, centrally controlled. They don't compete with Bitcoin. They're centrally controlled, and they are analogous to fiat money. They have nothing to do with Bitcoin, which is decentralized, and it has security features that none of those centralized coins would ever have. So it doesn't compete with Bitcoin. The only way the central banks can stop the speculative attack aimed at destroying the central banks, and I'm giving you some harsh reality here, but you know, people should take this on board, because we're entering into a world post central banks here, is the only way they can defend against this is to raise interest rates. And they're not going to do that. I mean, the bet is that Jerome Powell and these other banks are not going to raise rates. That's the bet on Bitcoin right now. That's the multi-$100 trillion bet being made on Bitcoin right now, that the central banks will not raise rates. And as long as they keep lowering rates, and as long as rates keep going negative, then the Bitcoin trade is an asymmetric bet. It's a one-way bet, and it's got almost virtually no top. I mean, you're talking hundreds of thousands of dollars per coin or higher. Even, you know, JP Morgan just came out with an estimate of $650,000 per Bitcoin. Citibank is estimating $300,000 per Bitcoin. So I think they kind of see what's happening here. They want to get ahead of it. They want some exposure to it, but nothing's going to stop this now. The central banks, they thought they had the game completely rigged with their collusion, the global banks all working together to keep and not only to keep fiat money viable beyond its term, but to attack gold, as we know. You know, JP Morgan, how many fines have they paid for gold manipulation? Innumerable fines. And we see that in all the big banks, the bullion banks. And they thought they had it made. They thought that they would escape. But Michael Saylor and others figured out that they've got this vulnerability, and the game is on. I got into Bitcoin as part of my efforts, you know, with Stacy going back many years now. The global insurrection against banker occupation is what we called it. You know, we've talked about the dangers of fiat money and central banking for a number of years, and Bitcoin was obvious to me back in 2011 that this could be an escape route. And now we've got the likes of Michael Saylor, possibly Elon Musk, Paul Tudor Jones over there in his hedge fund. He's now piling on. Stan Druckenmiller, the architect of the Bank of England raid, has made positive comments on Bitcoin. Ray Dalio was a skeptic. Now he's kind of neutral. I think Ray Dalio will put 10, 20% of his portfolio into Bitcoin in the next few months. particularly since his performance has been pretty bad for 2020. He needs to get back in the race here. He needs something, some alpha. Ray needs alpha. The acceptance by mainstream Wall Street, Wall Street sells products, right? And they are part of the distribution, but they're not the key decision makers so much. I mean, not the vast army of brokers out there, but it doesn't matter whether people understand this or not. It's like how many people could explain, the exchange rate mechanism disaster of Black Wednesday in 1992? Ask the average investor, how did Soros bankrupt the Bank of England in 1992? And they'll say, I have no idea what you're talking about. So, a year from now, 2 years from now, Bitcoin was $300,000, $400,000, $500,000 a coin. And you'll say, oh, well, you own it in your account. Can you tell me how Saylor organized a speculative account back in 2021? They'll be like, no, I have no idea what you're saying, but I know I made a lot of money.
It does, yeah, exactly.
Need acceptance.
I don't think it matters then, but what I'm saying is, like, for mainstream folks here, they see like Saylor, they see Dalio, they see Druckenmiller. All of a sudden they say, oh, well, maybe Bitcoin's not so risky if they're taking part in it. All of a sudden they feel safer investing in Bitcoin because of this acceptance.
Yeah, well, people who put their the $1,200 relief check in Bitcoin, right, I think are close to tripled their money already. The government's sending out another $600. The average investor got the buying power, but when I was working on Wall Street in the 1980s, you had a shift to the institutions. There the price discovery is in the institutional level. The retail trader is not driving price discovery. It's the institutional money that's driving price discovery, and the institutional money is figured out that they've got a one-way bet here, and they've got virtually unlimited buying power because the central banks have made the cost of money virtually nothing. So what Saylor did was, and I got to give it to Saylor, I got to hand it to him, he could have taken the easy route and simply borrowed a lot of money and bought back his own stock. He would have made a ton of money. But instead, he thought, what, as an engineer, as a rocket scientist, as a deep thinker, I figured out what these cyber hornets, as he calls the Bitcoiners, I understand what they're saying here, that there's a vector out of the central bank collusion that's destroying the world, and I can make 10, 20, 30 times what I would have made had I been buying back my own stock. Now, the mercenaries that run these big companies like Apple or other companies with huge cash positions, they're not going to, or Jeff Bezos, they're not going to sit back and watch Michael Saylor get richer than them, right? Saylor could be richer than Bezos if this works. And Bezos is not going to sit back and say, oh, jolly good, he's a wonderful chap. Good luck to you, matey. No, he's going to be like, I don't want somebody else being richer than me. And Larry Ellison doesn't want anyone being richer than him. Elon Musk, right? So they're like, wait a minute, we got to get in on this trade. So there's just a huge rush by institutional money. Whether the retail person or the average person figures it out, or they get involved, it doesn't matter. They're not a factor at all. America is run by a clique of super billionaires, and you have to understand what they're doing.